Hello, this is Cynthia Fick, and this is the May 9th stock market update. Wow, we here at Financial Life Planners, we just love our jobs because there is never a dull moment. We have many conversations with our clients and our colleagues, and most of it is along the lines these days of, it's not if we have a recession, it's when we have a recession. Inflation, oh, it's never going to come down. The debt ceiling talks are going to throw off the whole stock market and the economy. And of course, we have the horrible banking crisis that's hanging overhead. And so my job is to rise above what I consider some of this to be noise. Some of it is rise above the noise and focus on what the stock market, the Federal Reserve, and the economy is showing us they want to do. So let's go straight to the charts that I like to look at. So last week, Gina talked a little bit about this. There was a JPMorgan investors survey. 95% of investors thought that stocks were going to fall for the rest of the year. 5% thought that the stock market was going to basically stay the same, and almost nobody thought the stock market could go up. That's actually a contrarian indicator on the positive for the stock market, because most people do the wrong thing at the wrong time. They fall asleep. And right now they're thinking the stock market is never going to go up again. And that's what most people we talk to are thinking. So that's one thing I would say is a positive for the stock market. The second thing would be what the Federal Reserve is actually saying as they think right now. And the St. Louis chief Bullard, he's basically saying that he still thinks the Federal Reserve is going to achieve a soft landing. He said the base case is for slower growth, not a recession. He says the labor market's really tight and that's going to take some time to cool, but overall, he thinks we're going to achieve the soft landing. So that's somebody from the Federal Reserve. He just said this on May 5th. The third thing is the stock market itself. Let's look at this. Basically, we had a big rally starting in the beginning of the year. I told you that it looked to me like more of a tsunami wave type of rally because it had depth, it had strength. A lot of stocks were participating, and I felt pretty good about it. And then we had the Silicon Valley Bank situation, and the market began to fall. But the market has not fallen apart. It's actually doing really well. We're up to some old highs that we had in February. And I told you it's going to be interesting to see what the market does as it gets back up to those old highs. And again, we're just right at it. The longer the market rests, consolidates, it gains strength. And that, again, is a positive thing for the market. Sure, yes, we could very well have a 3 to 5% downturn in the stock market, but the longer, again, we go where we're just kind of trading sideways with some little bit of expected volatility, think of all the market has had against it, and it's still holding in really strong. So that is something, it's actually a chart in front of us and not all the other noise that we're listening to. The market is really good precursor of what's going on in the economy. It's usually about 6 months ahead of time with the economy. So there's the second thing, what's actually happening in the stock market. Another thing that I like to look at, and those of you who've been with me for a while know this chart very well, it's the U.S. Equities Bull Bear Indicator. It's that higher level institutional level indicator service that I subscribe to. And believe it or not, in April, it went bull. Yes, hard to believe. April 21st, 2023. If you go back and you look at the other times that this indicator has gone bullish, March 21st, 2003, it went bull, and look down at the S&P 500. The S&P 500 proceeded to go up. It went bull again in May of 2009, dropped down below. The stock market proceeded to go up. And so it's been pretty accurate in calling the big move up in the market. And yes, sure, occasionally it has come back down and retested that line, but never a major fail on this that lasted for any length of time. So I consider this to be very positive. I would just encourage you to keep an open mind about a less bad result when it comes to the stock market, the economy. Sure, there's going to be volatility. I can almost guarantee it. But nothing has changed yet. When I will let you know if I see there's evidence to contradict this. But we'll keep talking and we'll keep watching, and we'll let you know if anything changes. In the meantime, have a great week, and we will see you next Tuesday. Have a good one. Bye.